Bismillahirrahmanirrahim. Assalamu alaikum and very good morning. In today's class, we will discuss about depreciation. To understand depreciation, at first we should know, we already know about clear. C for L for E for expenses, CLE, A for assets, and R for. So today what we are going to do, today we will pick A, means assets. Assets are economic resources. If this term has come first time in your life, you can immediately write down there in your register, in your notebook I mean. So assets are economic resources, and we know that we have different types of resources. We have, different types of assets. Among them, we have one type of assets, and these assets are known as non-current assets. The another name for non-current asset is fixed assets. The most important characteristic of a non-current asset or a fixed asset is that these are for long period of time. Number one. Number two, all fixed assets support organizations to create revenues. For example, there is a person, he is selling juice of sugarcane. So the machine which is available with him in his business is supporting him to generate revenues. So these assets are known as non-current or fixed assets. So if someone asks you that what do these assets do? So the best answer is that these assets support organizations to generate revenue. Now, except land, all non-current assets, the cost of the initial cost, according to historical cost method, which you can see in your book. The title of the book is Business Accounting 1 by Frank Wood. In that book, if you will see chapter number 10, there you will find different concepts. Among those concepts, you will find one concept which is called historical cost concept. What does it mean? It means when you bought a fixed asset, even after 20, 50 years, if someone asks you that what is the cost of the asset, you will tell the initial cost of the asset is this. Because behind that you have a source document. For example, if Munawwar bought a car before 10 years, so when I bought the car, I have got a source document, the invoice of that car. So today it is quite possible the value of the car is different, which is called book value, which might be a market value, which could be a fair value, which could be another term, but that is not the cost, that is different. So if you want to make a balance sheet, in the balance sheet we are supposed to record the cost of our non-current asset. If someone will ask you that what is the cost of your non-current asset, this specific asset, this specific car which Mr. Munawwar has bought, so you will ask, where is the invoice? The invoice will tell, because there is no matter of subjectivity now. Subjectivity means everybody is giving its own idea or its own value of that specific asset after 10 years. But suppose if I am showing you the initial invoice, that this was the cost of the asset, this was in this invoice the cost is written, then we all have to agree. And that is basically what? That is basically objectivity. So we all are thinking, we accountants think in such a way that we should agree, we all agree at one point. We go further. So except land, all assets values go down because of utilization, because of usage. You bought a mobile, do you use it or not? We always use. Fine. So if we want to understand about depreciation, we should know that depreciation is charged on what? What is depreciation? So before I discuss something about depreciation, I would like to discuss about IAS 16. For accountants, to guide accountants, we have different standards. Among those standards, there is one standard that is called IAS 16, International Accounting Standard number 16. You can just go to Google sometime and then you will write summary of IAS 16, then you will get one page and that page will provide you the summary of the whole International Accounting Standard. IAS 16 is about PPE, property, plant and equipment. PPE, so you know, PPE, you know, right? This is not PPP, this is PPE. Property, plant and equipment. Property. When we talk about property, it means we are talking about buildings. In terms of when property, in property we can, in general terms we can say land as well. But land appreciates. Land, the value of the cost of the value, the cost of the land does not go down. The cost of building goes down. Then we have plant. Plant means, suppose if Malaika wants me, sir, today we are making a program, we want to go for industrial visit and we are going to see what are the operation or how the people who are involved, who are there in work at Philips Electrical Company, how do they work? So what we are doing, we are entering in that specific premises. You will find there is one building, there are manufacturing process, there is one building, there are admin department is sitting, for example, in the same premises. So the whole infrastructure is called a plant. There are different machines as well. Property, plant and equipment. Equipment means machines. So whenever you are buying some machine, so what happens? The value of that specific asset goes down. Nowadays a new thing which you must learn, and that is machine learning. Machine learning is what? Machine learning, computer itself by the support of internet providing you what? Some messages. For example, if I tag you in Facebook, so automatically what happens? A notification comes to you. So who is sending the notification? What is the background of that notification? The background is machine learning. Machine learning is a new science. Okay, fine, we go further. So now what happens? We are taking an example. The example is given in our book and we are discussing that specific problem, which is in chapter number 26. Question number 1. In that question he says that cost of an asset is 2600. This is the initial cost of the asset. If someone asks you, Madhya, please tell me, if I want to ask a question, from where we get this value of the machine? In the book it is written, but suppose practically speaking, if I want to find out, practically I want to find out from where I'll get the cost, the initial cost of the machine. If you know, or if you want to participate, you can raise your hand, you can tell me, anybody. From where I'll get this value, this cost? Market. Good. And?
Machine value.
From where I get this value? Market. And any other person? How do I know the value is 2600? Who will tell me? Source document. This is the answer. Very good. The source document, the invoice tell me that the cost of the machine is 2600. Now what happens? The second point is the life of the asset. When we talk about depreciation, it means you are talking, now I am explaining what depreciation is. Depreciation is an expense. Why it is an expense? Because of whenever we bought the machine, we are receiving the services from the machine. Do we get the services from the machine? Yes or no? Yes. We take the services. So the point is this, that when we receive the services, we need to record an expense according to accrual concept. Chapter number 10, accrual concept. Chapter number 28 in your book, income statement and balance sheet. How do we make income statement and balance sheet? So there you will find accrual concept. So accrual concept says that expenses are not recorded on the basis of cash, but expenses are recorded on the basis of services or product received. So when I bought a car and I am receiving the services, it means I need to record some expense as well. And that expense is called depreciation expense. So depreciation is an expense which is recorded due to a reason that we are receiving the services from the asset. The first thing. Number two, why do we record expense? Because of we are receiving the services. If we will not record this expense, it means in the list of expenses at the time of making income statement, if this expense we are not showing, it means we are not showing the true amount of net profit. Because of profit means sales minus cost. Sales minus cost plus expenses is equal to profit. So if you are not showing the expense, it means basically you are not showing the true value of net profit, the true amount of net profit. Now another thing, I bought a car. In 2 years, in the first year, I received the services from the car. I was driving the car, I was going to Seaview, I was going different places. After 1 year, what is your idea? Should I go to the same showroom and should I tell him that car was amazing, I enjoyed it a lot, take some more money because of I have used that? Will I do that? No, I will not do that. It means depreciation is a non-cash expense. This you can write. Depreciation is a non-cash item. Depreciation is a non-cash expense. It means, now the question is there, sir, when you are saying that depreciation is expense, when you are using the plant, machinery, property, plant, equipment, it means the cost of that machine, the value, there is a decline in the cost. So you are recording as an expense. Expense increase, you are supposed to record on the debit side. Very good. Expense debit. Cash is not going. Now the question arises that what title of account I should credit. Because of, if we read chapter number 2, 3, 4, 5 of Business Accounting 1. So we learn there, as well as in chapter number 10, we learn there is a concept, dual aspect concept. Every debit has a credit. So you have debited expense account, you need to credit something as well. And you cannot credit cash because of there is no outflow of cash. At this point of time, we are going to create a new account, and the title of that account is allowance for depreciation. Allowance for depreciation is an account which shows the decline in the asset of that asset which you are having, the decline in the fixed asset. For example, I bought a small battery bank. This is what this is called? Power bank. Yes, I bought this power bank of 10,000, and I ask, what is your idea? Jazib, where is Jazib? Shazib, where is Shazib? Shazib is sitting. Shazib, if I ask you a question that how many years I can use this, or what is the life of this asset? Shazib says, Sir Munawwar, the life is 10 years. I bought in 10,000. So every year the value of this power bank is going down. Now we are understanding. First year I use this battery bank, I receive the services. My depreciation expense for the first year is 1,000, and the value has gone down by 1,000. Second year again, if the method is straight line method, once again I am using the asset and the cost of the asset was 10,000. I am using it. It means again 1,000 has gone down. It means the remaining value now after second year is 8,000 because of 1,000 in the first year, 1,000 in second year. It means the remaining value is 8,000. Now remember, every year I need to record expense of 1,000, and every year I need to close the expense account in the same year's income statement. But allowance for depreciation will carry on. The first year balance in allowance, what was the decline in the value? 1,000. Second year 1,000 plus 1,000. So how much is? 2,000. Very good. What do I mean? It means allowance account carries the accumulated amount, the total amount. After 7 years, what is the allowance? 7,000. And what is the depreciation expense of 7th year? 1,000. Every year 1,000. 7th year is also 1,000. So every year 1,000. That is depreciation expense. But allowance means accumulated amount. The another name of allowance is provision for depreciation. The another name of allowance is accumulated depreciation. So these are the names of allowance account. Now we go further. So cost of the asset was 2600. Why do we